All right, good evening or good morning, investors. Welcome. We have some people coming to us from the other side of the globe, so we'd like to say good morning as well as good evening. How's everybody doing? That's cool. Yeah, you guys should be able to see a screen in front of you. A few charts. There you go. Yeah, looks good. Perfect. All right. Hey, welcome also to those of you joining us for the first time in our somewhat of a little open house tonight. You guys are in for a treat. You get a chance to sit in on a class that we have every Tuesday and Thursdays for our members. We've opened it up to everybody to come check it out today. And we're going to go through the same things that we go through in our class. On the screen, you see a few charts. You see a watch list. We're going to review our portfolio in a minute. We'll just talk about all the different plays that we're in, show you all those plays. And then we're going to continue where we left off on Tuesday with some education, following up on some specific topics that we were talking about on Tuesday. Now, as we go through the night, members, of course, if you have any questions, you're welcome to type them into the room there. If anybody joining us tonight is a little bit confused and you have a question, this is a very relaxed and open environment. Feel free to ask any question at any time. I do tend to ramble a little bit, so if there are no questions, I will just keep going. And usually we spend about 30 minutes or so just reviewing our portfolio and talking about new potential plays and stop adjustments and things like that. All right? Let's get started. All right, so on the screen we've got some charts, but more importantly we need to talk about our portfolio. So in just a second you should see our spreadsheet loaded up there. And what that is, there it goes. Okay, sorry, stuck for a second. What that is our current portfolio, and we put them in spreadsheet format as well as watch list format, which is over here. All right. So we try to show them in a few different ways so people can look at them in the way that they like to. This spreadsheet here is also posted in our private members area so that, in the event that you can't see it as clearly on your screen, maybe you have a small monitor or watching us on some sort of mobile device that seems to be popular these days, and you can't quite make out some of the numbers, you can go to the private members page and you can see our spreadsheet there. We update them on Tuesdays and Thursdays, along with any charts of positions that we may take. Now, the members, what they see, let me show you real quick. When we decide we're going to take a play, actually what I do is not only do we put it in the spreadsheet and we talk about it in class on Tuesday and Thursday nights, but I also make a chart. Let me pull up a chart real quick. There you go. It looks like this. And it's real simple. We like to put the entry price in there, the two targets. We use two targets. And we'll put our stop price in there. And just a simple weekly chart to kind of show you what we're looking at. And we put the prices in there and a little more information that some of our members like as far as the sector and a description of the symbol. Now, unlike other places that you may have been in the past, we do things differently here. Rather than having me call out a bunch of plays and then just letting you guys have fun with them and see if they work or not, I actually post those charts ahead of time. So when I find a play that I like, I'll tell you, I want to buy it at this price. I want to get out if I'm wrong at this price. I'd like to take two targets, preferably this one and this one. And what I do is then manage an entire portfolio in front of you. And to be clear, I own all the symbols, right? So sometimes people want to see, let me see your positions, what do you have? I don't claim to buy more or less shares than anybody, but it just proves that I'm in it with you guys, all right? So other people like to just kind of post plays and then take credit for the winners. I'm in it with you guys, so winners and losers, we get to be a part of it together. So when I mark up one of these charts, I'm not just doing it for the sake of, making you guys happy. I'm doing it because I want to play it as well. And then what we do is after we get into it, let me see. So once we actually own the play, I'll go through and I'll update the chart so that it looks like this. There's no need to have the entry price up here anymore. And then I'll just put the chart in there and show you, okay, well, now we're looking for this target. In this case, we already hit a target. And then you can follow along that way as well. So some people like to print these out and keep a little book, and that's cool. You can do that. So that just goes to show there's two ways that we show our portfolio. And the idea here is we're not saying we have a magic strategy to buy or sell stocks. We're not saying that we're going to provide you with 10 symbols a day to trade with. The goal here is just to consistently build a portfolio and manage it just like a big hedge fund would or something, only with probably a lot less symbols, right? And so we're showing you constantly the process of raising stops, taking some targets, adjusting some targets higher, shooting for more money, getting ready for earnings dates, when we should raise the stop a little more. And so you really get that whole rounded sort of investing approach rather than just, hey, I've got a magic strategy and you guys should be a part of it. It's not like that at all. So one of the things that we cover in class that we'll go over now is our stop prices. And we raise our stop prices on Monday mornings, right? So they come out in a letter. We talk about all these symbols here that we raise our stop prices. Now we won't do that anymore throughout the week. We have a few members that are just joining us and had asked that question yesterday, and today too, if we were going to adjust our stops on some of these plays. And the answer is no, not until Monday. So if you're in here right now, we're not moving them. Same price. We'll adjust them on Monday. In particular, Boeing came up. We've had a good run on Boeing, and so they were asking about that. But that makes it very clear and very simple to participate, because if you know that these prices will only adjust on Mondays, you don't have to check in every day. You know what I mean? Whereas there's some other places where they'll say, oh, we adjusted the stop, we got out. You should have got out and taken your profits. It's not like that. Everything is very much ahead of time. So if I don't raise the stop throughout the week and the stock comes down, of course it's your money. You can do what you want with it, but you know exactly what I'm doing, and I show you the positions to back it up. I'm going to play along just like this. On the same sort of token there, when we're going to adjust our targets, we're always going to shoot for more. We will never lower a target. So you can always be confident that we're not going to say, oh, we got out, you should have got out. We're going to raise our targets only. We never, ever, ever, ever lower our targets. Okay? Pretty simple. So a few things that I wanted to cover for the positions that we have here. Now, if you're familiar with investing, you might have looked at our watch list over here, or our current portfolio on the watch list is how I have it. You might have noticed that we have two gold mining symbols, gold and silver mining stocks. If you're really familiar with investing, then you've probably already broken down this symbol list, and you're able to see, wow, we have some Dow stocks, we have some dividend stocks, we have some counter-cyclical stocks, right? We have some growth stocks, we have some you see what we're doing here. I want to talk about our two gold mining stocks at the moment. Those had a pretty good day today. And remember, we talked about our target here on this AUY. We're so close. I still have the order sitting here. I'm like, oh, man, we were looking for 1575. We didn't quite get there. Here's hoping that we hit that tomorrow. Because remember, we talked on Tuesday, and I wanted to hit that quickly. I wanted to get up to our target as fast as possible. But anyway, gold mining stocks had a good day, and that is these two are the only two in the portfolio that we would call bottom picking, right? I don't do a lot of that. So if you were to go through this list, right, here's the weekly chart over here. If you were to go through the list, you would not see stocks that are in downtrends. See that? Microchip, Target, right? See it? BCPC, they're all in uptrends. And I want to go over that in just a second. But the focus here, Boeing got a little exciting there, right? AEM and AUY are the only ones where you look at them and you go, oh, hey, wow, it's down. What did you do? Did you buy it here and hold and hold and hold? No. We do things a little bit differently. And I want to go over that here with you right now. One of the things that you might notice when you buy a stock is the inevitable up and down, right? You buy it, goes up a few days, goes down a few days. Sometimes it goes down a few more days, right? You buy it, goes up a few days, down. You're like, oh my gosh, make up your mind. Is it going to go up or is it going to go down? Well, as you look at our symbols here, there's no down, right? We bought FBHS, it goes straight up. Microchip, it went straight up. See what I'm saying? Target, when we buy them, they go straight up. There's no back and forth here. If there is back and forth on the symbols that we buy, it's either very quick and we get out and the game's over, we took a loss, or they're very small. See these little backs and forths right here on our daily chart? But overall, when we buy it, weekly chart straight up. We do this very, very specifically, and some people make fun of me for this, but whatever. Then as you go through, you notice, same BCPC, holy cow, up. Big up moves, small pullback moves. See the little days here? Otherwise, up. And why would we do that? Who wants to venture a guess as to why I'm not bragging, I'm just why every symbol we buy goes straight up rather than having a lot of these herky-jerky sort of moves, right? DG, straight up. We just bought that one. See it? UTX, straight up. I mean, it almost looks like, oh my God, you're crazy. Why? How do you buy these stocks? They keep going up. Anybody want to guess? AUI, again, AEM and AUI are our two sort of exceptions. Every now and then we have a specific play that we do, and we went over that last time. Macy's, straight up, new play. And then these are all, the further you go down our list, by the way, the newer they are. All right, so yeah, you on the same page there, right? You got it. So some people are saying, oh, well, it looks like you played a few breakouts. You've got strategy and rules for the different plays that you are taking. You're getting close, right? But to be more specific, why would we? How would we have this sort of focus, and how would we be able to hit these different things? Let's talk about and follow up with what we did on Tuesday. We were talking about Macy's the other day, and we were talking about the individual bars of Macy's. When you go through and you look at each individual candlestick, right, on the daily chart, we looked at each individual one, and we kind of described what to expect going forward, right? Now I want to talk it as a big picture. I'm going to show you the big picture, how to look at a long-term chart and understand whether you're about to buy something that's going to have a lot of back and forth, right? Like I would assume AUI and AEM, they're going to have a lot of back and forth. Or how to know something like Boeing. From the day we bought it, it's done nothing but go up, besides today and yesterday, which it's due. I mean, hopefully it pulls back a little. There's a big difference, and it all has to do with emotion. That's all it is. And that's part of the reason why I think we're in for a little bit of trouble here in the market. After we talk about this, you'll understand. Okay. Let's look at AUI or AEM, it doesn't matter, and let's play a scenario real quick. Now, we bought this as a bottom picking stock. If you just saw the spreadsheet, don't go buy it now, right? Everybody that's here just for tonight, all these symbols, if you look at it and you go, well, it looks like, what's the symbol here? It looks like WY is close to the entry. Let me go buy it. Don't do it, right? Because if you buy it and then tomorrow we say, oh, something's wrong, we got to get out, you're not going to know. I won't be able to update you, right? So you're at your own risk if you do that. Now, AUI, we're doing well on it. We're about to hit our first target, so please don't buy that now knowing we're about to hit our target. We got a nice move on this one. But it was not straight up. Notice if you look at the daily chart, lots of herky-jerkiness as we move up. Why is that? And why would we expect to see it going forward? To understand that, let's look back, right? Let's look back on a weekly chart, and let's just pretend that we're out there and in the past and we're investors, right? And you look at AUI, and we said, okay, wow, hey, look at this. AUI is moving up, and we're all excited. We're ready to buy it. And let's say we bought it, right in here. So, okay, we're investors. We're in. And it rides up a little bit, makes a new high, and we go, yay, okay, cool. So this is good. AUI is doing nicely. And then all of a sudden it pulls back and starts dropping, and we go, okay, well, that sucks. Well, that's okay. Maybe it won't drop much more, right? And then it drops a little more, and we go, oh, no. Well, surely we've got to be close to the bottom now. I mean, it's dropped pretty good. Many people, you guys can relate to this. And then it drops a little more, and you go, oh, jeez. Well, if it bounces a little, I'm getting out, man. I am getting out. And then it drops even more, and you go, oh, jeez, I should have taken my stop. This is horrible. I'm not. Okay, it's okay. I'm not going to tell anybody. Right? I just held it. So you're panicking. All of these investors from here to here underwater, aren't they? All right? So they're a little bit frustrated. And every one of us can relate. Don't try to be a hero out there. We've all done this now. I think it's a rite of passage. If you want to be a good trader, you have to go through one of these, bleeders that you just hang on to. All right, so then look what happens. Now we'll change the color. Okay, so AUY starts to bounce, right? And these are some people just getting in for the first time, right? And some of the people, like us, we pretend that we bought it here, right? We're going, oh, thank goodness, it's bouncing a little bit. Oh my God, I thought it was never going to bounce again. And it goes up, and you say, oh, that's it. I've made it back to my entry price. Look at that. How lucky is that? I bought it here. I made it back. I'm getting out. Always keep in mind that when it comes to trading, you are nobody special. You might own a big business. You might have been the best real estate broker 5 years ago that there ever was. You might even be a professional athlete. Who knows? But when it comes to trading, you are never anybody special. Even the top dogs out there, the best people that trade or manage money, they're nobody special. They all go through the same emotions as everybody else. So if you are sitting there saying, oh, whew, thank God, I just hit my average price, I am getting out, I sat through that for like 6 months and I'm finally getting out, what do you think everybody else is doing? Everybody else that bought at the same time is saying the same thing. I'm getting out, man. Common sense, right? So if you buy the stock down here as a new investor, how can you expect much of a move when you know that all these people over here are going to sell at any up move? It's a bit of a troubling thing, right? So we only look at these every now and then. And I just happen to think we found at least a temporary bottom in AUY. We've been patient, especially on our AEM, the gold miner. And we know that it's not going to be a quick buck, right? We're not going to make a lot of money and go brag to everybody right away. Now, which one would we go brag to everybody about? All of these, all of the other ones that we play, right? FBHS. This one's been nothing but up, right? And so this is a big difference, right? Because when you look at FBHS, we bought it, basically it was just a kind of a standard breakout that we bought. Well, how many investors out there are holding this stock and saying, boy, I hope it just bounces so I can get out because I'm losing? There are no investors in this entire chart that should be losing unless they're short, right, betting on it going down. So whenever FBHS makes a move up, even though this is a weekly chart, so we're not talking, this is a long term. So every time an FBHS wants to make a move up, who in their right mind would sell the stock? There's a little profit taking as we go, right? Even today, this is pretty impressive today. We might be near an end here on this FBHS, but every time we bought it, right? This is our oldest position, by the way. It was brand new year. We bought this stock January 8th. And so every time it goes up, there are no sellers because the stock never went down before. It hasn't hit a point where people have said, oh, if it just bounces a little, I will sell. So it's a beautiful thing. What else happens here? You guys get that, right? Because I know we have some new people. I want to make sure if you're, not too accustomed to this. I just want you to think emotion. In this scenario, everybody's happy. Nobody's underwater, so there's no reason for them to sell. In the other scenario, there were people who were potentially underwater. We know there are at least some of them that have watched it go down. And so when it bounces, they just want to get out. So they're nervous, right? They're not going to hold on to it. Okay? So there's a big difference there. Now, what's the other reason? Look, we'll go to Boeing and talk about this one as well. The same thing. We've had so much good luck with this Boeing. It pretty much just it ran right to our first target, and now we're being greedy and seeing if we can get more. But it's the same scenario. Because once you get to this point, there's nobody. This is all new for Boeing. So who's been holding that now has a loss? There's nobody. So all there is left to do is to buy. Now, That's the emotional side of things. The other side of it is selfishness, is very simply selfishness. Whether it's me being selfish or the big mutual funds out there, I'll tell you why. If I'm going to be in here and I'm going to say, all right, I'm going to put my portfolio right in front of you, and I'm going to manage it right in front of you, and I'll show you what I do, when I do it, and I'm going to make all these claims. I better be able to show you some good stocks, or you're very quickly going to say, this guy's full of crap, let me get out of here. I would do the same thing. So selfishly, I want to pick stocks like Boeing that are going to blast off. Selfishly, I want to pick stocks like BCPC, FBHS, Microchip, all of these, Target. I want to pick the ones that are going to go for you. So why on earth would I sit around trying to pick bottoms, knowing that even if I do get the bottom, even if let's say this tail right here, I figured out that I was supposed to buy it right there. Look at the road. Look how long. 1 week, 2 weeks, 3, 4, 5, 6, 7, 8, 9, 10 before it made a new high. 11, 12, then 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, blah, 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 blah. All the way to here before we really see any money. How happy are you going to be with me? You can say, this guy took a year to make any money. This is horrible. And respectfully so, you should walk away, right? So selfishly, I want to pick them when we buy it, it's just going to go. We're either going to lose or it's just going to go. So you don't have to wait around for a year to see if this is worth it or not. Okay, so that's me being selfish. Now, realistically, I can't control what you're going to do. I don't manage that much money, or I don't manage someone else's money, so I don't have a big chunk of money to put into the market. But guess who does? Vanguard, Fidelity, Wells Fargo. Where's my Wells Fargo guy? Is he here tonight? He's not here. He's not here. Those people, BlackRock, like I said, Fidelity, Vanguard, all these people, have you ever looked at the amount of shares that they buy? Think about this. You're approached by someone who says, I'll open a retirement account and we'll manage it. We're from Fidelity. We'll manage it. You say, okay, well, I've had 10 other people knock on my door today and say, I would like you to open a retirement account with me. Let's see what you do. When they send those statements out every quarter, do you think they can afford to put something like this on there where it's sat around for 2 quarters, 3 quarters, doing nothing? They can't do that. Selfishly, maybe selfish is a bad word, but they can't do that because you would take your business elsewhere. You'd say, you know what, I spent like 6 months with you guys, and all you did was put me in stocks like this that sat around and did nothing. Yeah, they were up and down, but come on, man, I'm trying to make a retirement here. I need some money. So they have to pick the stocks when they do this as well. Make sense? Everybody says, follow the big guys. Go out there and follow the institutions. What the hell does that mean? How do you know when to follow them? They have to find leading stocks just like you should be finding leading stocks. So really, quit buying bottoms, really. That's what I'm trying to tell you. So it's the same idea. I mean, this Boeing is it's a simple breakout play. It's the same as Yahoo. We played Yahoo over the summer. It was a simple breakout play. Because now, this is a Dow stock. And so what are the mutual funds invested in? Dow stocks. So they have to show that they were a part of this. This isn't just me and you in there saying, well, I guess Boeing fixed their battery problem. All looks good. Let's get in. This is the big guys that are about to send another statement out to their customers, and they need to show that they have Boeing. That's why Apple's dropping so much, right? How could any mutual fund say that they missed this entire move on Apple? That they lost? I mean, if I were in some sort of hedge fund or mutual fund and they told me they didn't get at least some of that, you'd have to say, well, who's running the show? I mean, let me just put my money somewhere else where they're going to get this move. So we got to do the same thing. Imagine I am the mutual fund, except I don't want your money. Don't send me anything. And I'm going to show you this statement every Tuesday and Thursday, right, basically. So you're going to get it more frequently. And I have to show you that I'm looking for stocks that are going to move. And if they're not going to move, they need to stop out and get out of our portfolio because I don't want to show losers. So if we lose, that's fine. That's part of the game, but it needs to happen quickly. Why tie up your money for 6 months and then lose? How mad would you be? All the interest you pay and whatever, however you're set up. And so that's the point I want to make. If leave us today and you go and say, well, I can manage my own portfolio. That was some good advice. I'm going to do it. Make sure you're looking at these sort of things. Right? Don't buy the gold miners. This is kind of a fun thing. We've had a good year so far, so this is kind of a fun thing, and maybe we get lucky. Right? Buy the things like the most exciting was really was at Yahoo. Remember when Yahoo was in this long base and all of a sudden it just took off? Right? Nobody wanted Yahoo. Every time you watch TV, they say, "Ah, oh, Yahoo, it's a stupid. It does nothing, and it's never ever moved." But as soon as it got over that, everybody had to buy it. Yahoo's taken off, and that's why these stocks keep going and going. When there's nobody there available to sell, and this is common sense to you, the advanced traders, I know you get this. When there's nobody left to sell, meaning, to make it simple, when you look back this way and you see no down moves, when we're past this, when we're past this, when we're past all of this, right? That means nobody's losing. Everybody's making money except the people that short the stock, right? So from here to here, everybody's making money, which means nobody wants to sell. And then, like I said earlier, you get the little tiny moves down like this, right? See the one little red bar, and here's one up here, right? Those just taking little profits. There's nothing wrong with that. So you get a point where people say, I better protect a little bit. And then they get to hear, well, I better protect a little more. And, oh, I better just probably get out of the whole thing. And then they do it. No problem. Whereas, again, if you're going to play along on something like this, one or two, that's all you need. Don't do a lot of these. As you go up, this whole group of people, some people took their losses and moved on. That's fine. But like I said, we've all been there where we've held the stock well past where we should have. And now as the stock tries to go up, it's going to have a hard time. It will have more back and forth because not only do you have profit taking, but you're also going to have sellers, right? People that say, thank God I just got out. So we have profit takers, and then we also have the people that maybe held a little longer than they should. And they're learning, right? One day they're going to be great traders because they learned how to not do that. Right. So for those of you, if you have a little experience, you've been around, you've traded a little bit, I only try to keep it simple tonight because I know we have a handful of people that are very, very new, and so I want to kind of appeal to them too. But you'll hear the term support and resistance thrown around a lot, right? And that's basically, we just went over resistance. Resistance is simply as the stock moves up, there's an area where we know there's a good amount of people that bought the stock and now they're underwater. And somewhere in this area, we expect those people, as the stock moves up, we expect them to say, thank goodness. And they'll sell. They'll get out, take their loss, or take their small gain. Right? Here's a good one. Now, we haven't messed with this one at all. I still won't mess with this one. Facebook is probably the most popular one at the moment, or was. Same deal. How many people got wrapped up in that? Some of the best investors in the world. It's been great to watch these people make mistakes because you know that they're nobody special. Again, they're investors. They took a shot and they lost. It's no big deal. So many people. Every time Facebook tries to get a little something done, it rolls over. These poor people, they just want out. They say, well, get me close to what I bought it at and I'll get out. And it's been happening this whole way. So you have these bigger moves back. You never can get any sustainable move, and it's got to be frustrating for the people that are in it. So the things that we will look for in our to add symbols here, we're going to be looking for leading stocks, stocks that have the opportunity to lead the market, and all I mean by that is moving up without the market. Market has a down day, has a down week. We haven't had much of a down week lately, but the stock keeps going, right? And it just won't stop. We want stocks that are leading. We'd like to get a little dividend if that's possible. That's a bonus. I'll never search those out. And we want stocks where we have the least amount or no sellers, right? Now, we go over stuff like this all the time on Tuesdays and Thursdays, right, in our classes. And the idea is to try to make this simple. Now, if you're joining us here tonight for the first time and you go, well, that's kind of cool. I'd like to check this out. There's two ways to do this. One is what I consider the more expensive way. You can go to Trading Wings website and you can just flat out sign up and join us right away. We have a private members page that has all this stuff loaded on it. That's $99 a month. The less expensive or free way to do it is if you are a client of ViewTrade, which is the charts that I'm showing here. I use their charts. If you have an account with them or are considering or have opened an account with them, you have to call your customer service rep or send me an email, and I'll make sure that you get in for free. We have a special deal with them. I'm using their charts. I'm showing their platform here, and so they're kind of making up the difference there. So I would do it that way if I were the one that had to pay. But check it out. And again, we always meet on Tuesday and Thursday nights. And the cool part about it is, if you had to leave early or you came late, this is all being recorded. And so we post that on the private members page too. So you don't have to make it to Tuesday and Thursday. You could just sit in. Now, because I'm not going to review the new possible plays going forward. Our members already know which one it is. It's only one at the moment. But if you decided, I can't make it on a Thursday, no problem. You can check in on Friday and you can fast forward through all the stuff and see the play if you want, or you can just look at the chart, because I'll post a chart. All right. So we try to cater to everybody. We have some members that are not even in the United States. They're on the other side of the world. So they obviously want to, check it while we're sleeping. I missed a few questions here. I'm sorry. All right, what are we thinking next 7 to 10 days on gold? I think you're in good shape. Oh, you bought GDX. Okay, cool. Let's take a look at GDX. By the way, I know you're a little bit new, so GDX, for those of you that aren't familiar with it, this is the gold mining ETF. And basically, it's a way to play the whole sector. You don't want to try to guess which stock is going to bounce, but you think the sector as a whole is going to bounce, you can just buy this one symbol. You got to do it at 100 shares at a time, so you can't buy too small, I don't think, but you can bet on the whole sector. There's also another one that's a little less expensive. GDXJ, Market Vectors Junior. It's just a little cheaper. Same concept, it's just a little cheaper. So I'll throw that out there to you. But otherwise, I think you're in good shape. It was good to see that today. The move in the gold miners to kind of pop out of that back and forth that we've been going through. I expect it to continue, specifically with AUY, just another 15 cents so we can hit our target would be great. But I think we're in good shape. What is the middle indicator on the charts? Right here, this guy. We have specifically, actually, on this play that we've done here, we have a strategy where we go and combine all of the strategies together. Not my strategies, everybody else, what everybody else is doing. Price support, using indicators, using volume, using Fibonacci. We put it all together and we say, okay, all these people that play these strategies are about to probably buy this stock. And we do that. So the indicator that I use is I just use for reference is the stochastic. You can use any one that you like. I just like this one because I can, if I were to do this, I could still tell where it's at. So that's fine. There you go. And there's no magic setting. These are set to 10 and 3, but it doesn't matter. If you're familiar with what a stochastic does, you have one line. All it's doing is taking the closing price of the last whatever number you set it to, right? So if you want to set it to 50, it's going to go back 50 closing prices. This is a weekly chart. So it'll go back 50 weeks and average those closing prices, right? And then the other line, the lower number, is just a moving average of the first line. So you can see how there can't be a magic setting. But I try to go with what's most common. So when I know that I'm looking at an oversold indicator, then I figure that everybody else is set to it as well. And the general settings seem to be between 9 and 15, so I use 10. That way because I'm not looking for the crossover, I'm just looking to see that it's down here. So everybody else, whatever indicator they're using is showing oversold. So that just keeps me close. You got it. You're welcome. Oh, hey, Bob. Yeah, yeah. So, and this is that symbol. We were talking when you were here. AUY, fun day trading symbol as well. Not the fastest in the world, but it's inexpensive and does like 5, 10 million shares. Yeah, you can see it here. 6 million, 7 million, 5 million. Does a lot of shares and it's pretty inexpensive. hmm Well, hey guys, as always, whether you're joining us just for tonight or you're one of our members, any questions at any time, you're always welcome to email me. My email here is dustin@tradingwings.com, and I've always got it open. So if something hits you tomorrow and you think, well, I'm not a member, but I have a question, send me. Don't worry about it. Send me the question. If you want to look more into ViewTrade, you can send me an email for that as well. Or you can go to their website at viewtrade.com. That's V as in Victor, VIEW, ViewTrade. And if you want to just go to our website, tradingwings.com. I appreciate you guys coming out tonight or this morning, depending on where you're coming from. And we'll hopefully talk to you soon. So we'll wrap it up. I'm going to take my screen down as soon as I figure it out. There it is. You guys have a good rest of your day or evening, and talk to you soon. Night.